Hey everyone, and thanks for jumping back into the Cryptoverse. This is NFA Live. This should be a relatively exciting show for two reasons. First of all, we have the Bitcoin halving coming up in just about a day. And we also have a new guest with us today, Max from Because Bitcoin. How you doing?
Great. Thanks so much for having me, Ben.
Yeah, and you started doing this a year or two ago, is that right?
Yeah, probably about 18 months ago, officially. Yep.
All right, yeah. So Max is, I've known him basically since probably before he even started the YouTube channel, or right around the time that he started it. So make sure you guys go subscribe to him and Rob as well. Links to that are in the description below, so make sure you guys check that out. And we're just going to go through a lot of the different questions that I think would probably be on people's minds as we go into the halving. So let's just go ahead and jump in. Rob, we'll start with you on this one. The halving's tomorrow. It's tomorrow. We've been waiting forever. Here it is, fourth halving. And I'm guessing it's going to garnish some attention. Should be making some headlines different places. I'm curious, what effects do you think the halving will have on the larger crypto space? Do you think it'll bring new eyes to the scene, or are we still kind of just the same old people just kind of hanging out? Do you think it'll actually bring new people to the space? We saw a lot of new people come to the space last cycle, sometime after the halving. Or do you think it'll be quiet for a while? And do you see any narrative shifts after the halving?
That's a pretty loaded question. First of all, I would just like to say that Max has a great background. I'm sure he got to the same place I did, which is Fiverr. And hopefully it didn't get ripped off, but it looks great. And I got to tell you, one of these days, Max, we're going to have to put that into an NFT, just me and you. So yes, that is my old green screen, but I'll be jumping in that green screen as soon as the Bitcoin hits 100K. But to answer Ben's question, which I think is is what everybody wants to really try to figure out, is this Bitcoin halving. And I know, like, there's a lot of, first of all, I still believe in the 4-year cycle. Some people say that it doesn't really register. And some people will talk, like Bob Lucas will say, well, it's just left translated and we're going to see a big blow off top in 2024, which could very well happen. But I still think that the narrative around it, and there's still a lot of people who say, well, there's mass adoption coming and it's already here. I still think I don't think that we're at the same level like we should be and what we could be in like 2028 or 2032, or, time comes up. But Ben, if you could just show my screen real quick, because everyone wants to know, like, well, the Bitcoin halving, and you did a great, I watched your video, Ben, about the Ethereum evaluation. Ethereum valuation of Bitcoin, about how Bitcoin dominance is going up and how it's wreaking havoc, and it's true, it is right now. I know people will also talk about like, hey, well, these things happen leading up to the halving. But if we take a look back, this is from Smart Valor. It's a good website, and if we take a look, they did all the work for them, which is great. This is how Bitcoin behaved in the year leading up to each halving, because we had one, of course, in 2012, 2016, and 2020. And I know people will say, well, there's always a dip. There's always this massive dip before the halving. And there could be. I mean, we saw one pretty massive one in 2020, but of course there's a reason for that. And we can either say, like, it's because of the almighty coronavirus, or it was something else. But yeah, there was a dip in 2016. But again, just take a look at this. So the halving one in 2012, the year leading up to the halving, it went up to 385%. And the year after, of course, because we always see all-time highs the year after so far, it went up 5,000%. Halving 2 in 2016, leading up to it, 142%. Now there's dips along the way, and we're seeing that right now. But then a year after that, in 2017, 284%. In 2020, even though there was a turbulent year like we talked about, it was still up 17% for the year, getting into that halving in May, I think it was May 12th, 2020. And then it went up almost 600% the year after that. And we can see here that yeah, same thing happened. The year leading up to the halving on November 28th, 2012, this is what Bitcoin was, 250. And then, of course, we come up, and then you can see right here that, yes, there is a drop before that, and then it comes up and there's a drop before. But it's like the same thing as like a bull market. So we're seeing the same thing kind of replay. I know it's a funny thing, because, like, Ben, you'll say, like, you say, hey, I told you that the Bitcoin Ethereum evaluation was going to start to lose momentum. are actually bleed away to Ethereum, and then people are going to blame a black swan event, and they never would have saw it coming, but here we are. And again, same thing happens here. 2015, a year going into it, yes, it's not a straight line, but we kind of, I mean, really, you rallied into it. There's, dips along the way, but I mean, it's going in that right direction. And then, of course, 2019 to 2020, we started at 73.25. We had it kind of flat, and then we saw the almighty coronavirus right here, but then we rallied into it. So I still feel like the same thing's going to happen. That's just how I see things, and I'm feeling pretty good about this halving so far. But the big question is, and we'll talk about this later, is what's the macro? Is there going to be quantitative easing or more quantitative tightening? Are they actually going to cut rates? Are we going to have the liquidity that we absolutely need, which we had beforehand? Even though we're in quantitative tightening right now, I mean, we still rallied pretty well, but can we get that liquidity back in the market? And I think that's the big question, on top of the fact of, are we going to see World War III? So yeah, that's where I got.
Yeah, it's interesting because at some point you would think we would need to make the shift from quantitative tightening to quantitative easing, but what needs to trigger that shift is the thing that I think we're kind of wrestling with. Someone asked where Guy was. I should have mentioned that he's in Dubai, and I mean, there's obviously a lot of stuff going on right now there with the conference and everything. So he wasn't able to make it this week. Max, I'll put the same question to you. I mean, like, what are your thoughts here on the Bitcoin halving? Is this just kind of the same old thing that we've seen before and everyone's trying to overcomplicate it? Do you see any kind of shifts coming after the halving? What are your thoughts?
Yeah, I would agree with the last part. I think that a majority of people, and it's very easy to do this, I tend to do it all the time, is to sort of chronically overcomplicate something that has for over a decade now been a pretty reliable, we'll call it a risk on event. And in the simplest of terms, all you need to do is, pull up your trading view chart and mark out every single Bitcoin halving, right? You need, at this point, you need to draw 4 vertical lines. Whenever a Bitcoin halving has occurred, look at the price action that has basically come almost immediately following. So, I try to look at this thing from every which angle. I look at it from the side, I look at it upside down. I try to include the macro and Fed policy in all of my decision making. But the truth of the matter is, this is a very unique time to be in the markets, right? Bitcoin is now on the global stage, in my opinion, for the first time. There is, new on-ramps into crypto, specifically being these, 9 ETFs. And it is, there's more regulatory clarity. The accounting standards have shifted in a positive light and are working to, become more friendly for corporations and big money to actually onboard into this digital commodity if they choose to do so. But again, like Rob had mentioned and Ben, like you commented on, there also are some macro headwinds which can only be ignored for so long, unfortunately. I am of the belief that we do still have some time. I believe we're maybe on borrowed time. Some people probably don't like to hear that, but I do believe that there is this unique pocket of time where it's all coming together and we can really see risk perform positively. Of course, I don't have to tell you guys this, and I probably don't have to tell the audience this, but historically during a Fed pause, until something has quote unquote kind of broken and we see unemployment, trending above 4%, and the Fed actually has to step in and begin easing through, interest rate cuts and other measures, we can actually see risk, being stocks and now crypto perform tremendously well. And, going back to, to the last cycle, we actually kind of went through a little mini Fed cycle here in, 2018, 2019, and 2020, where Bitcoin actually, the floor kind of gave out. We dropped to about 3K. And then we had that famous rally into June of 2019 when we topped. There was actually hikes going into that. And then, of course, right as Bitcoin basically topped in June of 2019, the Fed began to actually cut rates more or less right after that. And it did dramatically affect Bitcoin. Some will say, it was a reflexivity and, we had to, we sprung hard off of that local floor. So, of course, the market corrects to the downside. Some will say it's COVID. Some will say it was in the charts the whole time. Some will say it's not. I don't know. Nobody knows whether it would have happened with COVID or without. But again, I don't think that this time really is that much different. I think that every cycle has some distinct differences from a previous one. I mean, for example, last cycle we had a double top. We haven't had a true double top before. We have had a cycle like the 2013 one where we had, two pronounced peaks, but a true double top had never happened before. And additionally, in the bear market, we had never spent as much time below the 200-week SMA as we just did coming out of this most recent bear. So there are, of course, very recognizable and notable differences of every cycle. But to answer the question point blank, I don't think that this time is much different. And I'm trying my best to not overthink it, and say, you know what? There is no reason for the Fed to intervene at this point. We're trending in that direction and we are on borrowed time. There is a day of reckoning coming, but I do believe at the earliest, it's probably sometime in Q4. We have the halving, in less than 2 days. And I do believe that there's plenty of room for risk to run in the short to middle term, maybe going out 6 months.
Okay, yeah, no, I mean, it's great to get you guys' opinions. And the market has been on an absolute tear. I mean, essentially since October, right? I mean, it was pretty boring summer last year, but then since October, the market has basically just been up only up until the last few weeks. But the next thing I'd like to talk about is, of course, Rob's absolutely favorite topic, and it's of course Bitcoin dominance. And you guys know my views, but I always like to get other views because it's a good idea not to live in an echo chamber. So Bitcoin dominance has once again broken the new highs. We saw 57% actually. It came really quickly. That moved to 57%. It's kind of cooled off back. It's back down to like the 55, like 55 and a half or so. So it has cooled off quite a bit since that rally up to 57%. Max, I'll start with you first on this one. Do you think it's going to keep going up after the halving? It was going up into the spot ETF, and then it kind of waned a little bit following the spot ETF, but then it just kind of picked right back up. So, what do you think is going to happen this time? And this kind of goes to the whole the last question as well. Like, will there be a narrative shift in what people are focused on? Will they start focusing on more things besides sticking with Bitcoin? Do you see, what are your thoughts on that, Max?
Well, first I have to give you a compliment, Ben, because you were one of the few people that with a big following publicly called Bitcoin dominance rallying to this point. I didn't expect it to get up to, I think it topped at 57 recently or wherever it did. You deserve a lot of credit for that.
Well, I'm known for riding trends too long. We'll see.
Well, we'll see, right? Nobody knows besides the market, right? Like, we all have our inclinations, but you deserve a lot of credit because I remember months and months ago, I don't remember, it was probably 6 months ago plus, we did a space together, or you came on my channel because Bitcoin dominance was significantly lower and ETH BTC was significantly higher. And much has changed since then. So kudos to you. Where do I think it goes from here? So I think that Bitcoin dominance is in the process of, we'll call it distribution. Okay. I believe that the meat of the move is over. But that does not preclude it from going a little bit higher than here. Maybe 60%. That's not my base case, but let's look left on the chart and use that to maybe forecast what could happen next. So ignoring the whether this is a left translated cycle or an expedited cycle, let's look at it contextually for where Bitcoin is at, from a PA perspective, right? So Bitcoin actually has gone on to get above the previous cycle all-time high of 69K. So most comparably, again, ignoring everything else, but just pure levels on the chart, pure, where was the cycle high, where was the cycle low? You could probably compare Bitcoin right now to like December of 2020. Okay. If we just ignore everything else and say, okay, Bitcoin in December of 2020 went on to sweep the previous cycle all-time high of 19.7. It paused there for maybe a month or something like that. It was chopping around. Altcoins got destroyed during that time, right? Bitcoin uncertainty, like you always preach, Ben. When Bitcoin is uncertain, alts get absolutely eviscerated. And we are seeing that once again, right? So again, comparing this period of time to December of 2020, there is turbulence under the previous cycle all-time high, which is not uncommon. We saw that again last cycle and then also 2 cycles ago. It seems to be sort of the same thing happening again. What did we see in December of 2020? What we saw was Bitcoin dominance basically put in a deviation or bull trap high, where when Bitcoin finally decided it was time to push through with conviction above the previous cycle all-time high of 19.7, you saw Bitcoin dominance put in an explosive move, which ultimately ended up being sort of a bull trap, for the Bitcoin maxis. So I think it's possible we are seeing that deviation high right now. Only time will tell. I do have hedges in place, like I'm holding some Bitcoin L2s like STX and some Bitcoin ordinals and things like that I think would be beneficiaries of, Bitcoin dominance continued rally, maybe above 60%. But of course, I am of the belief that contextually with Bitcoin chopping under the previous cycle all-time high, seeing similar signs of Bitcoin dominance putting in, this last explosive push, I do believe that over the next 6 months or so, it would probably make sense to see Bitcoin dominance trend down dramatically. And additionally, and I don't mean to, bring this up because I don't know if this is on the agenda today exactly. I imagine that would translate to ETH BTC finding a bottom sooner rather than later. But that doesn't, again, preclude it from going down a little bit more. Only time will tell.
Yeah, no, I mean, it's great. And I mean, I think it's always worthwhile to hear these other views because, no one really knows, right? I mean, no one really knows. And, one thing that I've wrestled with a lot before, and I've seen other people do this too, is like, just because someone gets something right doesn't mean they're going to be right. They're going to keep being right. Right.
Mm-hmm.
And also just because someone gets something wrong doesn't mean they're going to keep being wrong. I mean, markets change. No one knows what's going to happen. And I could see ETH Bitcoin carving out a bottom this summer. That's kind of my base case. I could see that actually happening. So we'll see if that happens. Rob, what are your thoughts? I mean, I know you're more of a Bitcoin maxi yourself, right? Bitcoin dominance to 100%.
Yes, exactly. Go ahead, Ben. What was your question?
I'm just kidding. What are your thoughts here on dominance? Do you think you think we're getting pretty close to the top?
Well, first of all, let me just say that I was like listening to Max, especially on like the Twitter Spaces and things like that, because he's very smooth in his delivery and very smart and what he talks about. So I got to tell you, it's good to hear like different sets of opinions. It's great to have a Max here. So to talk about, I mean, Bitcoin dominance, I got to tell you, like when you were talking about the 60%, I'm like, yeah, I can kind of see it. I was under the assumption like, well, it always kind of comes back that way, right? Something happens. There's something that happens in the market, a black swan event or something that's just that kind of has disruption. And then people get scared and they're like, okay, I'm risk on, but not that risk on to go into like, Pepe coin. I'm going to go into the safest asset in the most volatile industry, which would be Bitcoin. And I could see that for sure. But then like, there's a narrative that people are always talking about, especially in the crypto space. I mean, the Bitcoin maximalists are going to say Bitcoin only, right? But there are narratives that are out there. One of those is DPIN, right? Centralized Physical Infrastructure Network. The other one are DEXs, because we see what's going on with the centralized exchanges getting sued, getting their pants sued off by the SEC and then leaving, of course. So we have to have DEXs. And then, of course, there's another big one, which is Web3. So we talk about that. But there's one that I feel is on an undertone, and Max alluded to it when he was talking about it, when he talked about runes, and he talked about ordinals, and he talked about things like stacks and L2s. And I think what's going to really push Bitcoin dominance up, I know Ben loves this part too, is the L2s or even L1s that are going to be built on Bitcoin. Ben, if you just throw this chart up, I always talk about this website. It's L2.watch. So imagine this. And even like Adam Back has talked about this, how he's talked about how he hates the fact that everybody's building off of Bitcoin. People should just build on Bitcoin, because he says it's like the TCP/IP layer for the internet. So why can't they just build on the safest, most secure network or computerized network ever built in the entire world? And he was right. So when I take a look at these L2s that are coming out, and they're all new, so you got to understand like this. Most of these are trash. Let's just call a spade a spade. But like when we talk about things that are coming out that are actually doing pretty good, like a Stacks who's been around for quite some time, I can really see things actually happening for sure. And then like I just dropped a video on my second channel where I talked about Core. Core is a top 50, well, it's 56 now, but it's essentially an L1, L2 type of token, which is built right on top of Bitcoin using delegated proof of work and delegated proof of stake together to actually make DEXs, NFTs, and a whole host of things that you can only do with smart contracts. So when I see stuff like this happening, I'm like, why can't we take away the nonsense that's going on over in Ethereum world and their massive gas fees? Like just like with Core and Stacks right now, if you use it, or the things that are being built on top of it, they're just going through their Satoshi initiative. It's super cheap and it's super fast. So for me to see that Bitcoin dominance could go up, why couldn't it? Especially with the different institutions that are here and how they've been drilled into it. Now they can say, oh, there's something else it can do and also smart contract. I see it could actually go above 60%. But again, I'm not always right.
No, I mean, it's possible. It's certainly possible. I think the answer is going to probably come in the next few weeks because, there's two prior examples where we had these like closes below the 8-week SMA, 2021 and 2019. And in 2021, after it happened and Bitcoin got a rally, ETH Bitcoin went up. But in 2019, when Bitcoin got that rally, ETH Bitcoin went down. So
Right.
I think if we see Bitcoin get some type of relief, I don't know, maybe sometime after the halving into May, I don't know exactly when it would be, but whenever that comes, whatever happens to ETH Bitcoin should be very telling about where we are in the cycle. So I'm going to be focused a lot on that over the next few weeks, but we will see. Next question, Rob, I'm going to start with you on this one to rotate. And, I remember last year you saying something like this and you ended up being correct. It was basically, sell in May and go away. No one's denying Bitcoin has been on an absolute tear since October. I mean, it was basically like 25 to 30K not even that long ago. And I think sometimes we forget just how quickly it has moved. So I'm curious, do you think it's going to be similar to last summer where we just the market gets boring before maybe moving up again, like later in the year or something? Do you think it's just going to get boring for a few months? Do you think, or on the other hand, do you think everyone's going to think it's boring and then we just get another, face, what's it called? Like a face melting rally or something?
That's exactly it, Ben.
Yeah.
Face melting rally.
Yeah, no, I mean, so what are your thoughts going into the summer? Because I mean, again, I know last summer you thought it was going to be boring. Do you think it's going to be boring again this summer, or you think it's going to be different?
Matt, well, first of all, I hope so. I really do, because everybody who's in the chat right now, answer a question for me. Tell me if you think that you've accumulated enough where you're like, you know what, I've bought plenty of Bitcoin and I just cannot handle any more bags. I don't want to buy anymore, especially if it goes down and gets cheaper. Just let me know in the comment section, because it seems like when these types of things, Ben, when you say things are boring, this is great, because this is when people who like the dollar cost average is fantastic. Or if you're dynamic DCA, as things go down, which I think where we at the risk levels now, 0.6, 0.59, somewhere around there.
I think a little above 0.6.
So like if we're in this place, we're like, well, I mean, for me, this is a good time to just accumulate a little bit. But as we start to if it goes sideways, well, great, I have more time to bring things in. But then if we want to talk about sell in May and go away, there's this great chart on this website that I steal from constantly. And if you just take a look, because it's selling. Cool. Yeah, it's a nice website. It's very nice. I think there's a sale going on until tomorrow, and then it goes away. So, but if you say sell in May and go away, it actually works out pretty well. I mean, historically speaking. But then if you really want to break it down, because people will say, but Rob, you don't get it because this is the halving year. So it doesn't really count. Well, if you take a look at it, I mean, if you sold at the end of May of 2020, I mean, you had a 30% increase on January, a couple of drops there, 34 and 10%. And then you're down here and you just kind of stay away until October. And then you buy in, and then October rallies, November rallies, and December rallies. That's not bad. I mean, I'll take that year, right? And if we go back to 2016, I mean, it's the same type of thing. If I want to sell in May, okay, well, June's going to go up, but I have red. I stay away September as well, and I buy back in October, November, December. I'm doing pretty good. So I still think it can work out all right. The thing that you have to understand, though, and one more thing is this: there's a presidential election, and I think this is going to be pretty tumultuous as we get into it. So there was this piece from HBK's Wealth, and it talked about the presidential election years versus the non-election as far as returns. And this is just taking a look at the S&P 500. You can see that in the presidential election years, which this is that year, it tends to like kind of peak off around March, April, and then just kind of fall away until we get into June-ish. And then we have a little bit of rally. And then election day over in November, it starts to go down. But again, the same thing. Sell in May, go away. October is here. You buy back in, and then we have a nice little rally. Of course, a drop here, and then off we go. But 10% for that year is not too bad. Now, does that mean that I'm going to sell everything? No. I'm just telling you, these are just the data points that we can take a look at. Me personally, I'm just here to accumulate and get into some early round type of cryptos that could either make a lot of money or go to zero. One of those two will always happen.
Yeah, I was looking at this. This is the S&P 500 in 2024 compared to the average of all election years, right? I mean, so you can see like it has come down a lot recently, but it also went up a lot too, like way more than it does on average. So there's just been a lot more volatility this cycle than I think we've seen in a lot of prior cycles. But yeah, I thought that was interesting. And that chart sort of reminded me of that. Max, what are your thoughts here? I mean, I know earlier you said you expected risk to do pretty well over the next 6 months, but even with that, do you think that the market could cool off before that phase, or do you think it's not going to really get much of a breather, or do you think the breather's almost over?
Yeah, it's a great question. Of course, we're all relatively familiar with the maybe cliche but overused, but also kind of accurate saying of sell in May, go away. One thing that I've been preaching for a while, going back to, I mean, even I would say Q4 of last year, is that I was seeing signs early on of a maybe expedited cycle for crypto. And it's probably off of, the back of this Fed pause, and there isn't quite as much, in my opinion, economic deterioration as a lot had thought, myself included. And we're in this, kind of Goldilocks window where risk can rally really unencumbered. So do I think that sell in May, go away will come to fruition? I would think that worst case, in my opinion, from what I'm seeing right now, and again, of course, subject to change, it's just one man on the internet's opinion. I think that similarly to how this cycle for crypto is being a little bit front ran, and we've actually seen for the first time a Bitcoin all-time high before a halving, which of course had never happened before. I also think it's possible that sell in May, go away is being front ran a little bit, and we're seeing that right now with this April correction. So similarly to Rob, I am not in the camp of, de-risking or selling spot, because again, like I mentioned, and during our first question here, if you just draw 4 vertical lines on your trading view and mark out every Bitcoin halving, look what typically happens in the 6 to 9 months following. Additionally, for a lot of us that have been slowly, and thoroughly, meticulously DCAing into our digital assets and our unregistered securities over the past year, a lot of us have tax consequences for selling right now, and I'm not really interested in incurring any, tax consequences trying to reposition, because May perhaps is a little bit choppy. So in my opinion, and again, going back, the past 18 months for Bitcoin, we haven't seen more than a 22% correction on Bitcoin. So from our local high recently, take it down 22 to 25%, maybe you get 57, 56, worst case. That's not enough for me to incur a taxable event to try to reposition. So maybe it happens, maybe it doesn't. But for me, ultimately, it doesn't make a big difference, because the halving is in a couple days. And typically what happens after a halving is months and months of prosperity and hopefully price discovery.
Yeah, no, it's a fair point. I mean, I think like all the corrections that we've had by Bitcoin for the entire bull market have only been about 20 to 22%.
Yeah.
We've already seen it go down about 18% or so. So that, I think that'll be the area I mean, if we get down there, see if it turns around, and if it does, maybe this time's not different, but yeah,
what do you think, Ben? Do you think sell in May and go away will come to a head?
I think now, I mean, so we went into the 0.7 to 0.8 risk band in March. So that, I think, was the time to de-risk some, kind of like during the spot ETF. At this point, it's kind of like when we went back to 39K after the spot ETF. it was a 22% drop, and then we just rallied after it, right? And so I was like, this could be our pre-halving year dip, and then the rally just continued. And so now it's kind of the same thing. It's like, the area to do it, if you were convinced about it, would have been in March, when gold broke out, because that's actually in 2019 when Bitcoin topped, was when gold broke out. So I think that would have been the time to do it. Now, I do think there is a risk of if you've waited till this point and now Bitcoin's down 20%, we did see both after the 2019 top and the 2021 top, the first weekly close below the 8-week SMA, we then had a rally back up, to the 8-week, right? Which is around 67K. We actually went slightly above it in both cases. So I think what's more important is not exactly what happens here at the range lows, but it's what happens whenever we get a relief move. Does it sustain, or does it just put in a lower high? I think that is kind of the thing to look for, because after the spot ETF, it wasn't a lower high. We just, had another face ripping rally higher. The reason why I am more cautious on this one than the last one is because ETH Bitcoin has now broken down and gold is broken out, which both of those events marked the 2019 local top. And it wasn't the market cycle top. And this kind of goes back to what Rob was saying. There is this idea of a left translated peak in 2024. And I can sort of I'm 30%, maybe 40% aware of that, thinking, hey, this could actually happen. If we were to rally into the summer to higher prices without cooling off, then I would be very more so convinced of a left translated peak. But what if you think about what happened after the 2019 top, after gold broke out and after ETH Bitcoin broke down, Bitcoin went into a 6 to 9 month bear market, in fact. Now, imagine you get that after the halving and everyone thinks the cycle is over by the end of 2024 because it just hasn't done anything since the halving, and then we just get another move in 2025, and then the cycle peaks when it always does, and once again everyone overcomplicated it. There is a chance that happens. So I think I would just watch to see what happens whenever we get any type of relief. Does it form into a lower high, or does it lead to a higher high? And then you probably have your answer to whether it's a left translated cycle or not at that point.
I can see that.
Absolutely.
Yeah. And again, even in 2019, it was just a local top. We bled for a while. We actually bled back to the 100-week SMA, and then we started to go back up. And then we had the pandemic crash. But if you ignore that, it was just sort of a bleed after all Bitcoin pairs broke down, and then once we got that back, we started to go back up. Those are my views.
And by the way, I mean, you've always said this going back when before I started my business and I was watching all of your videos years ago, Ben. You used to always say something kind of along the lines of, the longer it takes, the higher we'll ultimately go, something along those lines. And, I think this idea of a prolonged sort of mid-cycle correction freaks a lot of people out because everybody wants to be rich overnight, myself included, right? Of course, I'd love for us to just go straight up in a straight line, and I hope that we do. But ultimately, I don't think it would be a death sentence for Bitcoin to kind of reestablish value between 55 and 75K for even a full quarter. I think ultimately it would probably lead to more constructive price action to the upside in the long run. But people, their patience will be tested, no question.
Yeah. I mean, I think the thing to look for in the cycle, I think, is the Bitcoin dominance. I really do think it's the key for the cryptoverse, and I think that dominance will top before Bitcoin falls below the 20-week SMA. That's my guess, is that it's going to top before Bitcoin falls below it. And I think between now and then, Bitcoin gets occasional rallies that just take alt Bitcoin pairs even lower, is my guess. So that's why I just say, if you want exposure to crypto, Bitcoin, Bitcoin is a relatively safe bet. If you want to take on more risk, there's obviously the altcoin market. There's the full degen meme coin market. But you have to be careful with those. And I think the winning strategy with the altcoin market, and even if you are in the riskier meme coin stuff, is just to remember, in 5 years, that meme coin is probably not going to exist, or no one's going to care about it because they're going to be worried about the next stage of meme coins, right? So the way to navigate it is, it's okay to have exposure to various parts if you want to take on more risks, but just occasionally convert it back to Bitcoin if you make a lot of money, right? Because at least you then know, hey, Bitcoin's still going to be around in 10 years. I don't know if this random meme coin is,
Ben, how could you say that? How dare you?
Well, my
My
audience,
precious meme coins. Oh
I
my.
think I've converted most of my audience to Bitcoin maxis at this point. But I will say, by the time I convince the last person to be a Bitcoin maxi, that's when the dominance tops out and we go back the other way. I don't think we're that far away. I think maybe this summer dominance tops out. We'll see though.
But you are correct. Like, what anybody out there, like, if we're being completely honest, would you bet your life that your meme coin or your altcoin is going to be around in 50 years? Would you bet your life on it? I probably would not. Would I bet my life? I mean, it's an extreme example, right? Would I bet my life or something valuable that Bitcoin will be around in 50 years?
Would you bet all your money on it or
Right.
something?
That's much more friendly, right? So, I would for Bitcoin. I have a high degree of confidence, and that's why your strategy ultimately it's conservative, relative to a lot of other people that talk about crypto publicly, but it is ultimately a long-term winning strategy, and people need to recognize that profits from altcoins ultimately do have to flow back into Bitcoin. That is the sustainable strategy for sure.
Yeah, I mean, I think Rob was talking about this last week on NFA Live. We were talking about like, what do you do when you get an airdrop? And I think what was your strategy? Like just 50%, you take profits on it right away, 50% back to Bitcoin or USD, and then you let the no, it was you let it go up 2x or something, or if it goes up 2x, then you sell 50%. Was that what you said?
Yeah, I call it well, two things. I call it the half and half method. So you get into meme coins or something crazy, and then let's say you put it, $100 in, and then it goes $200. So then you sell half immediately, and you put the other $100, let it ride, because that's house money. Then when it doubles or triples or quadruples, then you take half again, or you take 2 or 3 or 4x, what do you want to do? And then you let the ride. And you do that until there's no more riding, and it just goes away. And then you're like, well, okay. I mean, I did 8x, but it went to 0, so I don't feel so bad. Because a lot of people will just let it go all the way up and all the way down. But if you just play with house money, there's a reason why, like I can see people in the chats going, well, this sucks because, now we're going to go sideways and, this isn't what I want to be. There's a reason why all three of us are pretty much just like on all of our videos and all of our Twitter spaces, we're pretty much the same person, whether it goes massively up or way, way down. I mean, there's a little bit of excitement, but it's because we de-risked enough to where we're like, well, if this happens, then we do this. If this happens, we do that. I think that's where people would want to be, as opposed to just going, okay, I sold my kidney, I hope this meme coin goes up. It's one of those things.
Have a plan no matter what, and then enjoy your life. Don't stress about it, right? I mean, have a plan. Like, if Bitcoin goes to 50K or even lower, so what? Have a plan. If it goes up, have a plan. I mean, I think, I used to navigate crypto without thinking about like, what do I do if this happens? I only would navigate it based on one particular outcome. I never hedged myself. But once I started hedging my views, then it makes things easier. You're like, all right, well, this is what I think, but if I'm wrong, I don't want to be, completely left out of whatever that next trend is. And when I get airdrops, well, I don't really get airdrops anymore because I'm not really that active in the space. But when I used to get airdrops, my strategy was immediately convert half of it to Bitcoin, at least half to Bitcoin, and then let whatever else ride. Because like half the time they would just go to 0 anyways. So at least you get some of that value out in sats. Why don't we go ahead and move on, because we do have 2 more questions, and then I'd also like to get to audience questions at the end. If you post your question now, I probably won't see it, so maybe wait like 10 minutes and then post it. This is an interesting question, and to be completely honest, most people aren't going to care, but gold is one of these things where like it doesn't do anything for like 10 years, you know? And like if you think about this entire Bitcoin's like its entire history, essentially since 2009, gold has essentially gone nowhere in that entire phase. But we just saw gold break to new all-time highs, and it seems to be a somewhat explosive rally. So I'm curious about what your thoughts are on gold. I often think that people who like gold are more alike to people who like Bitcoin than they would care to admit. I think the main difference is the generation that we are, right? So if I were born 1 or 2 generations ago, I probably would have been really into gold, but because I'm born into more of the digital age, I'm more into Bitcoin. So I think we're more alike than different. So I'm curious, like, what your thoughts are on gold here. It is now 2,300, 2,400. Max, where do you think that this is going to continue? I mean, silver is also not too far behind it in its own move. And I guess the other question is like, why do you think gold is rallying? So that's probably the bigger question is why do you think it's rallying rather than like, what do you think it's going to go to?
Sure. Yeah, the gold strength is pronounced. It's very impressive. Um, and I would say, I mean, why do people buy gold historically, right? It's sound money. It was sound money before Bitcoin. It was a store of value when, our parents' generation was nervous about the state of the world. They would, convert their dollars into gold, and a lot of it is more of it's a mental thing. It's a mental insulation. It's not like if your country was invaded, you're going to put 500 pounds of gold on your back and somehow travel to another country, right? But it's a peace of mind thing, and again, historically, it is a sound currency. There is a scarcity aspect to it. There's a lot of commonality and overlap between gold and Bitcoin, and I think everything you mentioned, Ben, is correct. I would say that my bias on gold really stems more on my perspective and my forecast on where I think DXY is headed, and similarly where I think Bitcoin is headed. I've already shared my opinion on where I think Bitcoin is going. We have the Bitcoin halving just around the corner. I expect Bitcoin to trend upwards aggressively over the next 6 to 9 months. Subsequently, I do believe that DXY is forming a sort of a distribution here. I do anticipate DXY topping very soon. And again, if you just overlay gold with DXY on a weekly chart, you can see that there is a pretty prominent negative correlation between DXY and gold. So I'm not of the opinion that we're going to see a decoupling where there's suddenly a prolonged period of a positive correlation where gold rallies and DXY rallies. I think that one of them is lying. So either gold is lying or DXY is lying. I think that gold is leading, and you're going to see DXY, of course, sort of reclaim that negative correlation and begin to take a dive over the next quarter. So I do expect gold to continue upwards, and I think it's probably off the back of the DXY weakening.
Okay, yeah, fair enough. It has been really strong, and
Yeah.
I can't help but look at it. I'm like, wow, you have like a 10-year base. I guess the bigger the base, the more explosive the rally. And I know like all the crypto, degens are like, it's up what, like 10% or something. And like people are like, 10% is like a minute candle on a meme coin, right? But for gold, for an asset that's that high market cap, like that is a big move in a really short period of time. And so like that's why it means something. Rob, what are your thoughts here? Are you
Well,
are you watching this gold move?
I'm not watching. I mean, but I own it. I own gold and silver. And I think, and I never understand. We talked about this many times. I never understood why the gold maximalists and the precious metal maximalists hate Bitcoin so much. Because like you said, we're trying to all do the same thing. We're trying to get out of the matrix, which is relying on paper fiat. And it just seems like there's that one gold bug guy that is what we all talk about for some god awful reason. But in reality, I think for the majority of people that are into precious metals, I think they can see the value behind it and of Bitcoin itself. And like, I never understood debates with this guy. Like, why don't we have a debate between that guy and like Mike Maloney? Mike Maloney is huge into gold. He's put out a great series on precious metals, and he likes Bitcoin as well. So like when I take a look at this, I think, why not old gold? Why not diversify? Like, we've got I diversify not just in the crypto, but the stocks, precious metals, and real estate. And I think everybody should kind of do the same thing. But to talk about why gold went up so much, I don't know, but how did gold do in 2022? Was there any kind of rally during that time?
I mean, it still mostly stayed below the high. I don't really think it did that well. It's only recently really started to show strength. I mean, I can pull it up and see, but
Yeah,
2022 is kind of split. It rallied in the first half of the year and then didn't really do too much and actually corrected a little bit.
Looks like, it looks like it topped in March of 2022 and then basically just went down until November, and then it rallied again into December kind of time.
There's a theory going around about why gold's rallying so much. It's because the nations that are going to war, they're fearful of U.S. sanctions. So how do you get around those sanctions? Well, you stockpile alternatives, and one of those would be, of course, gold. So people are talking about how Iran could have stockpiled after the Damascus situation and the bombing. And the reason why I ask about 2022 is because for the Ukraine invasion, I think it was February 2022, and the same type of thing was being said about Russia stockpiling gold at the same time. So I can kind of see that valuation. I don't know why they don't just use Bitcoin. It's a heck of a lot easier to transfer and zip around value, but that's where we're at.
Yeah, I always think those posts by the gold bugs are so disingenuous because I mean, like, I own both. Like, I own Bitcoin and gold, but like, if you go to TradingView and you look at the Bitcoin or you look at the gold valuation against Bitcoin, it's down so much since Bitcoin launched that it rounds it to negative 100%. like that's how far the valuation of gold has fallen against Bitcoin since Bitcoin has been around. So again, like, it's not, it's just, look, I mean, the Bitcoin valuation has far exceeded gold for a long time. I mean, my guess is over the next 20 years, Bitcoin will still outperform gold. You know, maybe in the short term, gold could outperform Bitcoin, but I mean, I guess it has been since March, right? Ever since gold broke out, gold's been doing better than even the S&P 500, even the Nasdaq. It's been having. My view is that I think that gold is breaking out because it senses that rate cuts are coming sooner than the market is potentially thinking, and so that's kind of why I think it's sort of sniffing something out, just like it did in 2019, and but we'll see. I mean, you know, we'll see if it plays out in the same way. Last question, and I mean, this is more so geared towards Max, because I mean, Rob is, I mean, you know, you've been around here forever. We've probably even asked this question to you before,
Yeah,
but I mean, if you want to answer it, you
Max.
can.
No,
All right, yeah.
Max has
So
got
Max,
this one.
yeah. So since you're new here, why did you start your YouTube channel? I mean, like, what was your motivation? What are you helping to accomplish with it? What brings you here?
Well, Ben, you actually played a big role in bringing me here. I was a very early follower of yours. Actually, before you even had your website, I bought your Google sheet way back in the day,
Gosh.
and I'm still locked into my original price. Thank you very much because I got in early. Pays to get in early.
Yeah.
Um, you know, I learned a lot from you in the very beginning, and I went through last cycle, and Ben and Rob, also this, this is a compliment to both of you guys. Amongst a sea of grifters and thieves and people looking to prey on unsuspecting retail, guys like yourselves, you conducted yourselves in a manner that, I mean, I can't even imagine how many millions of dollars you guys turned down from shill deals and, crap like that. And, I wanted to, in the beginning, play my part in that. I felt as though I had opinions that, I could share something to offer. I have an ability to lead. I have, an ability to organize a team. Um, and I wanted to play my part, my equal share in the sort of collective hive mind of, CT and YouTube, and help educate. That's sort of the underpinning of what I'm doing. Is I like to teach, I like to collaborate, and making money certainly feels nice, right? But there's a certain sense of fulfillment that I personally get out of somebody messaging me saying, "Hey, because of what you said, it made a difference in my life and something clicked for me." And that feels really good. And, I started because Bitcoin, and it's a small channel still. We're growing quickly, certainly, which, of course, if you go to Ben's beautiful website and you overlay social media growth with, the price of Bitcoin, you can see why I'm starting to grow quicker. I'm doing the same thing I was doing all bear market. It's just suddenly more people care about crypto. So, I'm a result of good times, and I pray that they continue on because, of course, it's, a nice tailwind for my young business. But yeah, I mean, really, to answer the question point blank, I love to teach, I love to collaborate, and I love to debate. Like, I have a differing opinion than, you guys are for some things, and there's some overlap, but that's what makes a market beautiful, is that you can think one thing, I can think another, and we can come together and just talk about it politely, and nobody knows what's going to happen, right? Like, we can't. I have my hunch, I have conviction, just like you guys do, but Bitcoin dominance could go to 90%, and
Someone
it could
clip
even
that, clip it, and put that on Twitter.
don't do that. Don't do that. Or it could literally nuke down to 10%, and we could have like the crypto equivalent of the Nasdaq bubble between 1995 and 2000, where altcoins bubble like people, can't imagine. Everybody's throwing money at altcoins, speculating anything that's crypto, and then 99 out of 100 of them don't exist in a couple years, So who knows what's going to happen? But yeah, I love to collaborate and teach and debate, and Generally, it's just a passion of mine.
How many subscribers are you guys at now? Like 13, 14K or something?
Yes, on YouTube, somewhere in between there. Yeah.
Well, there's 3,600 people watching. So if everyone here goes and clicks the link in the description below and goes over to Max's channel and subscribes, then I'm sure he would appreciate that. And I think he deserves it. They've been putting out, it's not just Max, by the way. I mean, it's a team of people. So go check that out. You guys do like daily live streams, right?
We actually have a show coming up at 10 a.m. Eastern time. We do a daily show. We've got a panel of 5 guys. We're all just
You gotta
traders.
wrap this one up then if you got it coming up in 10 minutes.
Yeah.
That's okay. I got a big team. They got it.
All right. Well, before we end it here, I did want to take at least a couple of questions. And one of the questions I saw was, what is the best way to learn about crypto and to do your own research? So, I mean, I don't know if they're talking about like from a fundamental perspective, but like if someone were getting into crypto, like what do you guys use to do your research? And I mean, and maybe talk about like all the different tools, or at least some of the bigger tools that you guys have been using, especially for all the different things that are happening in the cryptoverse. It seems like there's 1,000 different narratives that you could, follow, and whoever wants to take this one is fine.
Go ahead, Max.
Yeah, I would start on one of our 3 channels. I think that's a really good place, not to spew the obvious, but I would say learn to do very basic TA, right? And understand cycles. Like there's some very awesome free indicators out there. Like, I mean, you can even just look at like, Ben has he's kind of coined a very famous one. He's combined a 20-week SMA and a 21-week EMA, which has been sort of marketed as the bull market support band for good reason, right? So you can determine when, Bitcoin is trending upwards, high time frame, or trending down by just a simple moving average band. There's also things like the Pi cycle top, which I think people should keep an eye on, which is again a free trading view indicator. Someone made it. It's also on Ben's website. There's also some good on-chain stuff like Bitcoin terminal price, HODL waves, things like that. I would, as a beginner, I would stay off the hourly time frame. Like literally just go daily time frame and above. And whenever you see Bitcoin down, 50% from its all-time high, that's time to start paying attention to maybe consider entering the market. But learn very, very basic TA, and some of the more popular on-chain indicators can really help you just DCA at the right time. But stay off of the hourly time frames mainly.
The Pi cycle top, just to give credit, was developed by Philip Swift a while back, and the idea was to predict the top within 3 days, and it did a really great job of doing that in the first 2021 peak. And it actually happened. I remember it happening, and like no one really believed it, but
I think it was retrofit, right? It was fit after
it was created in 2019.
It was created in 2019.
Okay.
But it did get the first top in 2021. I feel like a lot of these like metrics that everyone created in 2019, they called the first top, but then most of them like didn't really call the second top because it was just sort of like a dead cat bounce that just somehow made it to new highs,
Yeah.
So yeah, that was kind of an interesting one. Rob, did you have anything to add?
Just one thing. Max makes all great points. The thing I would say is that if you really knew, you have to understand that it's not how much you make, it's how much you keep. And the big thing is that you have to watch out for scams and things to watch out for. And if you're going to get into like hot storage wallets, stuff like that, there's a video in the link in the description of all my videos, and it says the things the big mistakes in crypto, and it has like 20,000 views. And of course, it's the most important video I probably have ever put out because that's what people get screwed out and they get scammed out. And if they watch that video, they wouldn't happen to them. Another video I did when I'm going to sell all my crypto has over 100,000 views. So it just goes to show you like where the priorities are. The priorities are make money, but really the priority should be keep money.
Someone's asking the market's not pricing it in right now, but I did see like last night, there's been a couple of times here where like there's at least some investors like thinking about a rate hike. That is not like my base case at all. Like I think they're done. I think 5.5% is the terminal rate for this cycle. They might go higher next cycle, but I think 5.5% at the top. I'm not going to ask you if you think they're going to hike again because I don't really think any of us think they're going to. If you do think that, let me know. But I guess my main question is, what do you think would happen if they did hike again? Because that would talk about markets not pricing it in, right? I mean, I guess the implication would be like if the economy just accelerates into the, again, and there's not a cool down and we just keep on moving up, what would another rate hike do?
Well, real quick, what is Jerome Powell said about fighting inflation? Does he say that they're on the right track, or does he say like it's more stubborn, or what does he say?
They've kind of like the progress has slowed a lot, and I think they've kind of speculated that it might influence the number of rate cuts this year, because previously they had said 3 rate cuts this year, and I'm wondering if they're starting to walk. I mean, now the market is pricing in only 2 rate cuts through April of 2025. So my view is that, I thought higher for longer, but now that everyone else believes it, I think it's going to go back the other way, because once the market fully prices in no rate cuts, that's when people give up and you need to start having some rate cuts. But yeah, I don't know. I mean, Powell's basically said the same thing he said for the last 3 years. If, they're going to keep rates higher for longer until inflation's durably going back to 2%.
Yeah, I think that 3% is the new 2%, truthfully. I appreciate their narrative and their consistency and how they haven't wavered on that, and I think it's a great goal. But it seems like 3 is kind of a magnet, actually a little bit above 3. Like you mentioned, they are currently pricing in now. It looks like, our first 25 basis point cut on the September 18th meeting, and then through April of 2025. And these percentages change all the time, right? We'll see what happens. Potentially taking us down 50 basis points off of where we're currently at. Let me answer your question. What would happen if we got another 25 basis point hike because, inflation decides it's going to rear its ugly head again and start trending up above, headline 4 or 5%, God forbid? It's over. I mean, like, we are going to absolutely nuke. If we get another rate, I'm going to be as clear as I can be. If we get another rate hike, markets are going to capitulate. Like, that will be awful. Horrible for risk. Like, sell all of your assets, honestly. Like, if that happens, I'm not joking. I think it'd be terrible. I don't know if you guys agree with me, but that would be horrible for markets. But I don't think that's going to happen, to be clear.
I think you could have the same thing happen if they just refuse to cut soon enough too. Because like like a tightening cycle is not just raising rates, but it's also keeping rates too high for too long. And the median number of months that the Fed pauses is 8, and 8 would have been in March. So we've already gone 9. I think there's still a window where everyone talks about a soft landing, right? It's so hard to thread that needle to a soft landing because you have to stay high enough to make sure inflation doesn't come back in a second wave. Because if you don't, and you get a secondary wave like the 70s, you get a hard landing. But if you stay high for too long, like let's say they stay at 5.5% for another 6 months, then you start to run the risk of a deflationary crash, right? So that's why everyone sort of rolls their eyes about a soft landing, is because it's so difficult to thread that needle. And I do not envy their job. I do not envy their job, because it's not. And they're also operating with long and variable lags. Like, how can they know all the effects of their prior monetary policy? So yeah, it's a tough place for them to be.
And we are. Oh, sorry, Rob. Go ahead.
No, go ahead, Max.
I was going to say, we are seeing some smaller economies, in my opinion, forecasting when our rate cuts are coming. Like, we have seen the Czech Republic actually start to cut. We've seen Poland cut. So, historically, it's not perfect, right? But you are starting to see some of these smaller countries actually, they led through the hike. So they began to hike first, they paused first, and they've actually started to cut. So I do anticipate that, in similar fashion to what has happened historically, we will see the U.S. begin to, I guess, cut rates, hopefully, later this year. But I do agree with you, Ben. Like, if they held rates where they're currently at through, all of 2024, that would also put some pressure on our economy and our markets. But with that said, like, I don't know what you guys think, but I mean, really, the final, real dagger or domino to fall is going to be, of course, unemployment creeping up above 4.5%. Do you guys think that if they just held rates where they're currently at all through 2024, but we didn't see the labor market really deteriorate, could financial markets hold up in that instance?
I mean, if the labor market doesn't deteriorate, sure. I just think that it seems like the unemployment rate is trending up. And the problem with that is that it doesn't tend to move in a linear fashion, right? it goes slow and then it starts to accelerate at some point. And we haven't reached the acceleration phase, right? So there's still a chance that we can avoid it, but the longer they wait, the riskier that's going to be. I think there's a higher probability of a rate cut this summer than the market is giving credit for. I don't think it has to happen this summer, but I think the right thing to do is to cut at least 25 basis points this summer, 50 basis points, something like that, just to provide something.
And are you thinking in the June meeting or July meeting?
I mean, look, last cycle, I know that the altcoin market was a lens into the consumer. And I know that when alts broke down against Bitcoin and when ETH broke down against Bitcoin, the Fed basically cut 1 month later. And we have seen ETH fall against Bitcoin. It had a weekly close below the June low. We saw Matic Bitcoin crash below its June 2022 low. We've seen ADA Bitcoin and DOT Bitcoin. We've seen Litecoin Bitcoin and Aave Bitcoin. I mean, so many of these altcoins are falling off of their Bitcoin support levels, and you can see it with the Bitcoin dominance. So I think that the pricing out of all these rate cuts is going to cause them to get priced in, because the Fed does not base their decisions on what our altcoins are doing, right?
Unfortunately,
they don't care. What I find unfortunate is that a lot of the small like companies, like mom and pop shops, a lot of them are going out of business right now because rates are going up and times are getting harder. Like inflation is so high, so people just can't afford as much. But the Fed has to do it because all of us degens in the space can't help ourselves from bidding up JPEGs, and leading inflation to where it was. So I think that it's kind of a tough spot to be. And the Fed has to stay long enough to kind of break the animal spirits. Yeah. But if they do it too long, then you run the other issue of a deflationary unwind, and that's not really fun either. I know like people are like, oh, I'd love to go to the store and not spend as much money, but if prices go down, that's probably not good for risk assets.
Terrible. So everybody who's watching the videos, remember this: when you think like, okay, the Bitcoin market or the crypto market has to do this thing, it has to do this thing because it's been the cycle that's always done this. It doesn't actually work. Look at what we just talked about, just how fragile the markets actually are, and just to think how things have to really go in line before you realize that, oh, maybe I should have taken some profits when there was everything was overheated. It's just something to think about, because I hate people who round trip, and they really should, again, take some profits when everything gets too hot.
And one thing just to mention about rate cuts, and I mean, you guys probably know this, rate cuts inherently are not bearish, right? It's the underpinning as to why they are cutting rates. And, if you actually on a granular level, you go and you overlay the effective federal funds rate with, the NASDAQ or S&P 500, markets actually tend to rally for like 30 to 60 days, give or take, following the first rate cut. Until they wake up and they realize, oh crap, there's economic deterioration under the surface, which is why they're cutting rates. And then we see these major corrections. So I think whether the first 25 basis point comes in June or the end of July meeting, or I guess hopefully September, that's probably your 30 to 60 day warning, truthfully, whenever it comes. And I don't know when it will.
And then what about, no, go ahead, Ben.
I was just going to say, you're right. I mean, like the rate cuts inherently are bullish for risk assets if they're cutting for the right reasons. In 2019, while Bitcoin topped out when rate cuts arrived, the S&P 500 kept going up. Because the economy was not in a recession, right? It wasn't going into a recession. They were sort of like preliminary rate cuts. You could argue that Bitcoin is more tied to financial markets today, traditional markets today, than it was back then because of the spot ETF. So maybe it would track the S&P 500 a bit closer than it did last cycle once rate cuts arrive. But the issue is why the Fed is cutting. Are they cutting because they're trying to get ahead of something bad that's coming? Or are they cutting as a reactionary thing because they just saw a really bad labor market print? And that is when they're not bullish. Like that's when rate cuts are bearish. So it all depends on, Max is right, it all depends on why they're cutting.
And I think that it's also risky to, I do believe that there's just as much risk to the upside, truthfully, where assuming that they're going to cut because there is severe economic deterioration can also be, a very harmful strategy long term. Because like you mentioned, the first batch of rate cuts that we saw in 2019, the S&P 500 rallied out of those cuts like 15%. And then, of course, we had our COVID nuke in March, which took us below, where that first cut occurred.
Right.
But you know, again, it's like you have to be very careful, you know, kind of threading your own needle per se, because just because they're cutting doesn't mean sell everything, right? Because they could cut, you know, the labor market could be more resilient than anybody's expecting. The S&P 500 could go up 50% over the next year, and then something bad happens and you get a correction, but that correction doesn't take you down to as low as the point in which the first cut happens. So you just have to be a little bit careful, truthfully. You know, you have to really understand why they're cutting, and it's a tough thing to do. It's very tough.
Matt?
I mean, with the S&P, you know, there's been all sorts of like crises throughout all the decades. But if you just pull up a chart over 100 years, I mean, you know, the overall trend is clear. You know, the markets generally go up because the money supply generally goes up.
Yeah.
Yeah.
You know, why did prices of houses go up 40%? Because the supply of money went up 40%. You know, it's not really that complicated. So yeah, no, I mean, I think like as always, right? Like time in the market often beats timing the market. Because it's impossible to actually time the market for under most circumstances. And I think sometimes people get lucky with it and then assume that they're like a genius and can do it again and again and again. But the reality is that the market will humble us all at some point. Why don't we go ahead and wrap it up there? We'll have NFA Live back, I guess, next week. Next week, I think it'll be on Rob's channel. So we'll see you guys over there next week. And again, if you're not subscribed to Max or Rob, links to their channels are in the description below. And we will see you guys next time. Bye.